All right, hello everybody. Thanks for watching in the future, I guess. I don't know, my jokes are lame. It's 7/8, and your favorite time for market analysis. All right, so let's let's get rolling here. Um, Share my screen. I'm gonna do the entire screen this time, so I'm gonna share everything. All right, so um, today we'll just kind of start we'll start with a quick recap. So we got Fed minutes today, which pretty much nothing. The bond traders are really the guys who sorry, let me fix this. Bond traders are the guys who really know what's going on. So follow the yields, and you'll know where the general consensus on inflation is going. I'll show the yield charts here in a minute, but I guess some other stuff that had happened this week was the Iran war finally got restarted again here, as if we believed any ceasefire was realistic or not is another story. But we did see some sort of escalation with that again. So the market did a kind of weird thing. There was a pretty decent sell-off like last night, but then after that, we had a buy up today, and I'll kind of go through some of those reasons why I think we might have seen that. I think it was I don't want to say it was like unexpected, but I've been saying for a while that I think oil is going to set up for a short squeeze, and it did actually happen yesterday. So it went up a decent amount here, and I think what today was all about was really more of like covering for trap long positions, and really just trying to absorb a lot of the selling to try to not create some sort of panic here, because I think we're still kind of getting through a distribution pattern. But you can kind of see here with some high volume here. I got the Nasdaq up. Nasdaq's really taking the brunt of it here. But if you look at something like the S&P, so much junk out of here. You can still see here that we've still got some higher volume here with these sorts of patterns. And you can kind of see here that we've got a weekly sell signal. That doesn't really mean much at this point. It's still more of like a suggestion than anything. But you can also kind of see here that this purple line, this is the 50 daily moving average. This one, it's kind of been respected here, but I guess what really has me kind of thinking here that we might get a little bit more selling yet before we get some more consolidation. I think it's going to be just because we've had our second close below the 50 daily moving average here for Nasdaq. Now today, stocks pretty much drove all the rally. Semiconductors again, mega caps. Standard operating procedure. But I guess what was a bit more surprising is that there was some volume today, but there really wasn't any follow through. And I think not just because of the covering, but it was kind of more related to. I guess I could probably show the patterns here, but I think it was kind of more related to. It takes time to adjust positions. It takes time to adjust trades and things like that. If you're an institutional player, and you can't just do that in 20 minutes in the morning like you guys can, or like we can with our regular trading accounts. So when you see things like this, sometimes it can also be a trap, like a bull trap or even a bear trap. Like this morning, a lot of people are arguing, so buy the dip, we're back, that kind of thing. I'm like, well, maybe not so fast. Okay, so let's take a look here at what we got. I'll go over the bullish scenario first. I think it's definitely appropriate because I'll probably spend a little bit more time in the bearish scenario. What could happen after that? I'll do the short-term bullish scenario, and then probably like the uber bullish scenario here, and then I'll do the bearish after that. So at this time, kind of thinking here, it's kind of looking like just a regular consolidation pattern, where you get something like this. This longer-term trend line that we have, I think I just showed it. So like this longer-term trend line here, this is the result of that breakout that we had a while back here, and we've been trading above this, and we did have some what looks like decent support at right around early June here, where we had this big kind of jump up. That's where we had a lot of those gaps, and I guess some people were surprised I was surprised at least a little bit with the gap, but still, typically, I guess. So what I'm looking for. So again, this is short-term bullish pattern, and I'll just use the Nasdaq because I feel like the pattern's a little bit more clear here. When you look for these sort of patterns, at least what I look for is if they bounce at the 0.768, and that is exactly what happened today, which is I would say it's a very common bounce point if you have some sort of a triangle. So you can, but it kind of depends on like the first two waves. I won't go into super detail about the wave counts and all that sort of stuff and put you guys to sleep. But what is important to know is that typically, here I guess, let me try this. See if it works. You kind of get like an equal sort of throw to the other side. So you can kind of see here that with the first run up here, we did have got pretty high up. I think I was saying that this was like a flat correction or flat corrective move, something like that, which is just kind of it's kind of like trading in a box. But you can also see it, pivoted up here, got really close, but still didn't make a new high, which actually kind of aligns with this being like a final wave 5 kind of thing. That still doesn't mean that we can't make a new high. It's just where we are right now. I think this is probably the more higher probability setup. So typically what you want to do here is you want to look at the back half of the pattern. So today we stopped right around here at the 0.786, and you would think that typically you can do like you draw another triangle like this, and that is a typical bounce point. But since we did see this, kind of, since we saw this kind of little overshoot here, I would expect something sort of similar to happen. So what that means is you might see something like this, where we do a retest, another little bounce, and then we get just a little bit past kind of where we were before, and that would be pretty much like the equal sort of throw. And what that would do is if we do get this one little press back down, this would test that trend line again, and that's important because it kind of lines up. Again, I know technical analysis can be somewhat and wave counting can be somewhat subjective, but sometimes when you get like a confluence of things, and you can kind of get a sense of like how many like a sense of like what's going on with the price action underneath the surface. Like, yes, there's buying, but there wasn't so much buying today that we closed above the 50 daily moving average, which is important. And also you can kind of see here, if I zoom out, if you look at the RSI, we went sky high for very brief period of time, but now we're starting to see some of this momentum drag lower. And yes, we did just have quarter end, so be cognizant of that, but it's still a couple days into July, a couple of trading days, and we still haven't had any like major sort of up move or some sort of something to try to set the expectation for the rest of the month or quarter really. But we have had quite the run up. So I mean, I've always thought like, why keep buying and buying and buying instead of just let the sellers drive down the market, so you can have more returns for buying lower, as opposed to buying at a top or what looks like a top, and then it might sell up. I don't know. It's always interesting to me why there's a lot of buying. A lot of it I think is due to like trap positions or stuff like that where they want to get out there. But anyways, so this is sort of like your short-term bullish sort of scenario here, where you get a bounce like that, or you might not even see this. So you might not get this last little leg down here, and it might just continue to bounce. But there are a couple things that I kind of think we might not be considering here. So let me just make a note here. This 0.886. So let's assume that we get another trend line test. I think with the RSI kind of where it's at, I think it's probably 60%, 65% of a chance here we'll see a continuation or something within a day or two. Maybe we'll get a little bit higher yet, maybe the 50% retrace before we see another little move down, or at least a little, try to revisit this down here. So the next thing I'm going to do here is just draw. So typically when you get these sort of patterns here, these little ABCs, you always want to look for an extension of this 0.786, or when A equals C, which is at that 100 level. So you can kind of see here that this is pretty close, at least from like a termination standpoint. If we had an actual, like a clear full ABC, complete finish that move. Typically when you see this sort of like stab halfway through a typical typical stopping point, typically means that they're going to wait for the bulls to buy it back up and then try to sell it back down again. Why sell low when the bulls are guaranteed to buy it up, and you can sell higher, right? So I think that's kind of what's going on here, is that the bulls are just taking the bait. They're buying up everything here, and we're starting to get some actual selling, but it's not enough to push it down. So this is I guess the second piece that would reinforce that even if we do have a short and long-term bullish sort of setup for the next the next path higher, I do believe here that we'll probably see one more test of the low. At least what I would do, what I'm planning on doing, is if you have like open shorts that are in profit or whatever, I would be looking to take some profits down here and then kind of see what happens. Because if you do get some sort of and I'll cover this with the bear scenario, but if you do get some sort of like move down like this, you'll get another test and whatever. But this is the point where you load up on your shorts, not hold them from the upside, because this is still a breakout pattern, and it would be foolish to continuing to hold a bunch of shorts just hoping for the best. Hope's not a strategy. You got to manage your risk, especially when you're trading in crazy times. All right, so for the bullish path here, I think it's either gonna probably do something like this, where then we just do another march up, or we get another little move down here and flush out a little bit more of the weak hands, and then you get another move up. That's at least a thought here. And if we had so let's assume here, so let's assume that we actually just got, it kind of looks like a double top, but I don't think that's gonna be really realistic here. We actually have another sort of pattern here, which is like a developing like a bull flag, I guess you could say. This could definitely be be a possibility. But what I'm thinking is actually, for a longer term bullish scenario, which is probably more realistic, is maybe we see something like this, where we get just one little correction, and this kind of qualifies as like a wave 4, and then we get probably like another impulsive wave or something like this, where we then break up a little bit higher. It's definitely possible. I think that the big thing to be aware of, though, is that we do have, you could say this is like a double top, or you could say it's head and shoulders with sort of a kind of a lazy distribution, sort of right shoulder here. Markets go down, people forget about that, especially when you're having a crazy bull market. But I guess the reason I wanted to say that is because we've seen this kind of pattern before on the way up. It's like you've been fooled a couple times, or you see this rounding pattern. This is not strength. You can kind of see that with the the RSI kind of dancing around here. If I went up to a higher time frame, it would be a little bit more muted. But ever since we kind of broke out of this, that's when you really want to see if there's a continuation or not. You could see some sort of inverse cup and handle like this, and then you could see a breakdown. But I kind of think that it's getting a little bit, how do I say it? Like, the pattern is getting a little bit kind of long in the tooth here, and we haven't seen really a handle yet. So I don't really know if we'll see something like that. But anyways, this rounded top here does kind of qualify. But we have seen it before where you get this and it just gets, doesn't quite make a new low yet, and then it just takes off. We've seen that in a couple different scenarios. Like I'll show you guys. We saw that here. So just the last wave, we saw this rounded kind of top here, and then it just took off. And we've also, we have also seen it. This was more of a double top for all that, but you can still kind of see this is a kind of a common thing here, where it does show a little bit of weakness, but then it just rips up to the moon again. So it's sort of like these inverse cup and handle patterns that that really just keep on moving. But you kind of got to, like, it's kind of weird to say, like, you got to kind of see something like this where it's like a quick stab down and then it kind of keeps consolidating and like you have some time. But we haven't really seen that. There's always that little kind of consolidation. Like down here, we saw just a little bit of this, but we also saw, strength here. We saw, buy signals at the weekly level, but now we've been kind of getting a little lazy here. So I guess you could say, so instead of talking about what we don't know, let's kind of zoom out a little bit and see, like, where this might go. It is very possible, even though that this is not necessarily like a corrective pattern or something like that. This is also, I think this is why you're seeing a decent amount of buying, is because you're also seeing bulls trying to prepare for like a big flag, like a big launch off the top here. And that, I do think we have had the blow up top, but that would really be, I think, the ultimate move. And, if we do see something like this, it's going to run. I mean, it's going to really, really, really run, something like that, because this typically is just it's a bullish continuation pattern. But that's only on the short-term scale. When you zoom out, you've still got this long-term trend line breakout, and you haven't had a lot of strong buying. And in fact, you've had decreasing enthusiasm here. So I think what's probably more likely is not just a rip to space like this. I think you're seeing some distribution. It's very sell heavy up here for Nasdaq. What you might see is another kind of push down, retest, and then you'll see like the first kind of 5-wave series here. That's not quite right here. See something kind of like this, where we get the back test, and then you kind of fall back to the last little like consolidation zone. Back like back in December when we saw that. So that's still not that bad of a setup. If you're bullish, bullish on this, you could get, you wouldn't have 5 waves, but you could still get a giant retrace to test this or to back test this sort of thing. So I think that you could see something like this. I think it's realistic. We haven't had a correction in forever. And for Nasdaq, well, no, that's way too much. Oh, I'm sorry. I'm on a different time scale of a chart here. But still, when the market has gone up crazy amount, just with this ticker here, if I pull it off with the log chart, you can still see it as kind of parabolic, right? So if I take it out the log chart, it's actually a little bit easier to see. You still get this kind of flag pattern here, but it's a little bit more noticeable when you see this sort of melt up. And that's what I think, you're seeing this blow up top. But because there's so many different factors at play, it's also why I don't think you're seeing a big sell-off like you saw with, or like you could see with, something like, the Nasdaq, like back in 1999. I mean, the valuations are still super stretched, but this is, in my opinion, it's probably the biggest bubble the world has ever seen. Which also means it could probably go a lot farther. The valuations are stretched, yes, they are, but I think what's going to bring this down is going to be high oil prices and high yields. Once oil gets, $80-$90 a barrel, you're already looking at almost $5 a gallon for gas, and people just can't afford that. Things are already tight for a lot of people with inflation. So people are just going to buy less stuff, and then companies are going to hire less people. So anyways, it kind of went bearish there. But anyways, this is like the longer term sort of bullish scenario where if I take off the log chart here, you can see that this entire run up, I mean, this is huge. Market, the Nasdaq essentially doubling in a very short amount of time, like since April. I mean, that's huge. Doesn't mean it can't go huger, higher. I don't know what the word is, but anyways, all I'm trying to say here is that put it in context with where we're at. Like the Shiller PE is already at 40. At the chart, it's already at the, you pay $1 today and you're expecting $40 in return in the future. Like that's essentially what it's saying, and that's with the S&P, and that's right where we are, or slightly above when the when the .com bubble crashed. And it took 3 years to wipe out 80% of all that value. So if you have inverse funds and if you somehow manage to hold them for a couple of years, you might actually do significantly better than all the other bulls who held up until this point. Mathematically, if you have 30 more years to go for retirement and you skip a 30% correction, you save yourself 4 years of working life, and that's how much more return you can get out of your 401k. I mean, it's a kind of a blanket statement. I had to go into the math, but who's got time for that right now? Just trust but verify. All right. So, anyways, back to the log chart. The log chart really, I think, shows more of like a tight sort of representation of like how large these moves are in the past. Whereas if you take off the log piece, you can see that the more recent moves have a more like a, they look a little bit more exaggerated, I guess you could say. But I think in honesty here, they are exaggerated for a reason. These when you're looking at 30, what was it, like 35% or whatever we had last quarter. And isn't it funny how, it starts like virtually April 1st, and then at the very end of June, it stops. Like I've always thought like, oh, okay, cool. So I mean, you look at this, hey, it's the beginning of April, right? 2025. And then it just keeps ripping for quarters. And then you finally get that sort of like take profit sort of thing. So anyways, like try to keep that into perspective here sometimes too. Okay, so that's, other than kind of, dig through all that here. I'll show, actually, what's, I don't know, it's kind of like I did kind of go through the bearish projection at the same time. All right, let's get that out of there. Anyways, so short-term bear, hopefully that makes sense for the bullish case here. Really, it's just, yes, market breadth is increasing, but, or at least it was till yesterday, maybe, who knows? But unless the Nasdaq can reclaim this 50 DMA, I don't think it's a buy right now. I think it's a wait and see. The S&P here, this one is a little bit different. This one, I think we are seeing, you can kind of see this little overthrow pattern here. You can clearly see these 5 waves here, and I think this might be coming to an end here. What you could see, and I think the Nasdaq would probably lead the way for this. The S&P is proving to be pretty resilient, at least lately. Is that you might see something like this where it drops back down to something like 7,200 or a little bit lower than that, where you see it's just like a continuation sort of pattern. Now these don't typically break down like I don't want to say here or sit here and say, yep, this is definitely going to break down. No. What you might see again is like you might see another one of these continuation patterns with these flags, and might rocket to the moon here. But but when you have these longer term sort of consolidation patterns with a lot of decent selling, there really isn't a whole lot of inventory. And I've been saying that for a long time. Like, I mean, how much, like how much of these shares have been accumulated in the last 2 years? Probably not a lot. They've probably just been buying all the way up. I mean, clearly they have. There hasn't been even a day or two of consolidation. Like, back in April, it was just, huge buys, and it was like 1 or 2 days. We used to have something like this where now this is a real accumulation phase. This entire thing here. This is, just steady buying, selling into the buying, that kind of thing, and just kind of finishing up the pattern, and then it kind of rockets up. But all the shares that have been really accumulated around these points here have got to either be mostly distributed from these big volume sell-offs. I mean, even the one with April, I mean, nobody had a chance to accumulate much back last 2025. Then we got a couple other little shocks and scares here, but for the most part, it's kind of bounced on the 200 DMA every time we've hit it. So I would say if this pattern does kind of break down here, you could see maybe like an extension of it, and maybe hit this point of control. Definitely, bounce back. I could see a scenario where that might be true. I mean, you got a lot of buy delta there, so right around this 50% level, or certainly the 68.50 level, I think would be more than reasonable for like a strong buy. But that would require any bull whatsoever to like stop buying, which we'll see. And it kind of pitch back to the Nasdaq here. This just doesn't really look super healthy to me. But every time I've said that, it's gone and ripped up. I think one of the things that I've been picking up on with all these little fake out small little sell-offs, and then it just keeps ripping up, is that there's been favorable conditions, like favorable earnings with mega caps. There's been favorable rates. There, the narrative around inflation has always been like, oh, it's not so bad. When in reality, it's like, well, it's not good either. But it's really just not like that. The whole mood of the market is just buy. And I think the only thing that's really going to derail it is if you have like a big kind of scary sell day where you have like a 8% limit down kind of thing where everybody freaks out, and people get kind of crushed, and then retail traders lose a lot of money, so they stop trading. So like a lot of that liquidity, I think I think that's what you're seeing here, is that a lot of retail buyers are stepping in here. I've noticed a lot of new traders, new comments, new Uber drivers giving me stock tips, things like that. And when you start to see that, it's kind of gets a little, like a little frothy. I don't really know if I like that word, but yeah, analysts use it a lot. So, I mean, I can't deny that there's a lot of buy delta up here. So the probability of having a run up here is pretty significant. But we've already gone up 35% in a quarter. I think, and now we're at year 3 of 25% plus gains for the S&P. We've already made history here. So how can we use that to our advantage here? So shorting is not really cool lately. The last couple of years, there used to be a lot more give and take, but now it's just very like steamrolly with the bulls. But some of that's by design. Some of that's also some of that's also just a byproduct of easier trading, favorable conditions. So I think like I said, anything that's going to really signal that this bull run is over is going to have to be some sort of large correction day, like a big scary sell-off margin call kind of day, and one that unfortunately wrecks a lot of people, and that removes liquidity from the market. I mean, we've seen them that they will happen again. Will it be tomorrow? Probably not. But I think hey, it's an election year. Typically, you do get some sort of correction in an election year. We just have been prolonging it here, and you've also had pretty serious supply shocks to the chain, and I think that indexes are looking a little just delusional lately. But it doesn't really matter what my opinion is on the matter. It's all on, or it's all reflective of the movement of the market. So you got to trade with the trend, not against it. But something else I'd like to point out here, just one more thought on the bear side here. is that you've had a lot of this buying, like a lot of let's say like defensive buying or just buying in general. Then you have today, where yesterday I thought it was a little weird that the Dow didn't move much, and then yesterday, today, really we saw kind of like a pretty decent sell. And if I put it, yeah, it doesn't really make sense in the log chart, but I mean it's only really like 1%, but still, when you kind of look back at it to like the week chart, you can still, still it's even if they buy it up for the rest of the week, you'll still probably like the highs probably in for a hot minute here. If I pull up something like the Nasdaq, and this is the weekly charts. I mean, you can kind of see that we've had a couple weeks here of just distribution, and they've been high volume weeks as well. Same thing with same thing with the S&P, where you've had kind of like a high volume, like right in the middle, is like a test to buy support, but they're all kind of like dancing around these moving averages. But yeah, in my opinion, it's like anything below the 50 is a sell. Anything above the 50 is a buy. But at this moment, it's probably higher risk to buy if it's above a moving average, and we just don't know. So I think hey Jake, just wrapping up the indexes here. So I think if you get another little downdraft with here with like the Nasdaq, let's say, to kind of complete that move, and I think you'll probably see something maybe like this to complete this, and then you've got this this volume shelf here, and that could be very supportive, where you get like a continuation. All right, so that's the indexes here. Let me jump to, well, before I do that, any questions, comments, concerns?
Could you just go over where you think where you think we'll be at tomorrow? I've got a QQQ short that I'm trying to get
Jake,
at.
let's because I went over that stuff. I'm with the recording. I've had some feedback about like trying to keep it brief. So why don't I stop the recording later, and then I can follow up on that.
Okay, thanks.
Sure, no problem. All right, so let's do the commodities here. We'll start out with the well, not really commodity, but let's look at the yield. So yield didn't really do much with the Fed meeting minutes today, and it doesn't typically do stuff. So like Fed meeting days, or like the meeting minutes days, and when you get these, sorry, FOMC minutes. Been talking a lot today, or shouting on my computer screen. I don't know, either way. I stayed up way too late last night watching futures, and I'm feeling it today. But all right, so when you get these FOMC minutes and like quad witching or triple witching days, like they end up really not making much of a big deal. It's a lot of pomp and no circumstance, I guess you could say. So again, we didn't really see any real movement here. I think the real story is Iran. You've got Trump coming out today, saying whatever Trump says, bunch of losers, or who knows. I'm paraphrasing, of course, but essentially saying ceasefire's off. Who knows? Maybe it'll be back on tomorrow. But for now, at least, it's still kind of a bearish thing, and it sounds like Iran is not interested in negotiating anymore, just because they're having their supreme leader funeral this week. It's not a very good week to poke them, especially if you're trying to negotiate. So I guess what happened was the Treasury revoked their right to sell oil. Or like they reimposed the sanctions, so they got mad about it and started hitting some ships in the Strait. So I think that what you're seeing right now is a result of that. So like this pretty strong pretty strong run up in the yields. Anything above, I mean, it's getting a little scary how high it is, but anything above 4.5%, you typically get reactions, like sell reactions with indexes, especially like with Nasdaq. Growth stocks hate high rates. Really anything above like 4.3% is not good for stocks, but we've seen how that's played out. They just don't care, but it's a bubble. The only thing we got to figure out is, where are we in the bubble? Are we at the end, or are we at the almost the end kind of point. I'm kind of thinking almost the end, but we'll see. So anyways, I think the yields just got to get a little bit higher here, and it's going to start to, if we make a new high, it's going to start to trigger a lot of things. I think, the debt that we sell to try to service the U.S. debt is also kind of driving this up here. All right, so that I'll skip to oil too, and then I'll do metals. But oil, I think you got a ton of buying here, and I think one of the reasons why you got some selling today, I think this is covering. Kind of like I said before, I think there's going to be a short squeeze in oil, and sure enough, from the lows here, it jumped up 12%. That's a pretty good squeeze. So now you're starting to get some selling, and I think this is a lot of these potential sellers here that have been trapped below, thinking that the ceasefire would hold and everything would be fine. However, it's also straddling the 200 daily moving average, so it's kind of like there's a lot at stake here. So if you can't keep the price down, your shorts are toast. So either they're dollar cost averaging to sell into the strength here, and then try to push it down one more time here, assuming there might be a taco trade or something. But at this time, I think it's only a matter of time here before it goes back up again. It's just been drifting down the entire time here while these guys have still been shooting at each other, and I think it's unrealistically low given our supply concerns that we have. And if you guys read the daily note today, I made a comment that in the past, like Russia would be able to fill the gap in oil or something like that, or we'd be able to source in other places, but Russia even has to import. They have to import oil now from oil and gasoline from China, and just because Ukraine's hitting all their refining capacity. So I really think we're going to have a problem here with supply, and if oil goes back up to $90 or $100 a barrel again, like I don't want to say like I believe, no, it's going to cause a recession. People just can't support $5 gas prices with inflation hot on their heels. And every time you've had a doubling in oil price in 52 weeks, you've had at least a 20% correction with equities. So yeah, that's kind of why I think this time the bulls buying the dip, they might get steamrolled, but I really hope it's not the bears again, because there's really only 2 or 3 left, and those are the only people stopping a melt up in the market. Is the higher you melt, the more crazy the crash, and crashes are good for nobody unless you're short. Then it's nice. All right, so let's talk about gold here. Gold, I think, is actually in the same sort of boat, where it's very sensitive to the yield. I think that it's not very, put it this way, with how weak the dollar becomes over time with inflation. I think that metals are not really where they should be. I think they're pretty low. I think we also got this inverted head and shoulders here, which is in my opinion a pretty strong kind of buy signal. But you could also see like a finishing move here, where you get this one last little disruption and shake out a lot more of the buyers. But 38.50 for gold, back when it was at its highest, I mean, it was almost $5,600. That's crazy. So let's say if it actually did hit the bottom again and then retest, let's just eyeballing it here. Let's say it's retraced, a standard amount. And again, wave 5s typically tend to extend. So this looks like a pretty strong kind of wave 4 sort of correction. I mean, 38% is pretty nice, guys. So if it takes a dive here, yeah, you could have some short-term pain. And if you're long gold, sure, get some hedges and stuff like that. But that the upside potential of gold and silver, I think, is pretty clear, at least in my opinion. And I also think that this is a very, very good buying opportunity for something like silver as well. Before, if you think about it, before all the hype around silver, or before it just took off, we had a whole lot of volume here, and we had like the first kind of run up, and then you had this just melt into space. That was that eventually got this 30% correction in like a day. That was interesting to watch. But I think you're still just getting a lot of accumulation here and getting ready for a push up. I mean, we still have rare earth element problems. We still have, spending, all the sort of stuff that happens with, or all the sort of stuff that comes with recessions, which is more spending. We got to spend ourselves out of recession. It's the biggest crack of Keynesian economics crap I've ever heard. But that's an opinion of mine. Anyways, so yeah, I think metals they might, head down a little bit more, but I plan, excuse me, I plan on picking up some more if I can. But just want to wait. I don't want to, keep adding and then all of a sudden, be wrong. It's better late than wrong. But anyways, like we've got some of those higher income funds that have more weight in there, but those are longer term plays. So even if you hold it for a year, get all those dividends and it goes down 20%, you could still recoup the vast majority of that just by holding it through the dividends. All right, natural gas. This one's just been weird. It's just been puttering around. We've been cycling contracts here and nothing's really been moving. We can just move on from this one right now. I think, it's possible. It's possible you might get some sort of more grind up here. You get another little tap and then kind of gyrate some more. But we're also getting closer to September, which is typically, typically like a bullish month for gas. But they typically, so I say typical because last September was the weakest for demand for gas in the last history. So, all right, Bitcoin, I think is just taking a quick little breather here. They finally got off the floor. They did make a lower low here. It's possible you see this little, like ABC up. I actually think it's not a bad point to maybe grab some like BTCI or something, like some sort of higher income like fund or something. You might see something like this for one more test of the low, kind of where it goes down a little bit. Then you probably see some sort of reflexive bounce higher. But for now, that's just one scenario. I think what's more realistic is probably something like this, where you get like this sort of inverse head and shoulders pattern. You get a little bit more consolidation. And if you see something like this, we're starting to get some good volume, then that's a good buy point right there. So that's that. But if equities do take a dive, it might also dive with it. But I mean, it's been so beat up that I mean, it's got to go up eventually. But I think equities are stealing all the fun. All right, so let's look at the stocks here. So stocks, I think, is kind of doing like a B wave thing, where the measurement here, like it didn't quite hit this 1.382 sort of extension level. I mean, that's a pretty deep ABC. So like if I'm looking at it like this, just so you guys can follow along here, if I'm looking at it like this, my first, this is why this is bear target one, because typically I would have expected it to bounce there, and it kind of did the first time, but then also it's got this trend line and it failed its back test, which is weird because stocks is invincible, right? Well, not so much, I guess, if you're looking at it from a technical analysis standpoint. And also, if we kind of zoom out here, you guys remember, really on the call, kind of remember me talking about the RSI kind of declining here, like the moving average is not very supportive of, crazy buying. I mean, now you're starting to see concerns about, at some point, a lot of the spending is not really gonna, like data centers have really kind of been bought already and bought and paid for, and like all that CapEx is on the books, but now you got to monetize it, and it's going to be difficult to monetize when you got high rates and you got to do corporate debt financing. So these companies might have to take on more CapEx to fund all that spending, and still don't have a lot of return for it. So earnings will be interesting to see here. Upcoming, we'll see what happens with it, but I think chips have at least been flying so high that it's a little bit difficult to kind of justify valuations, but when does that stop bulls for? So anyways, I think it's possible you will get some sort of You'll get some sort of like extension here. Maybe you'll get one last little low. And this is sort of like we talked about the Nasdaq chart before. Like you might see something like this to kind of finish up this move. Or you might also see like a C leg up, something sort of like that. But then I would expect us to see one more test of the low before it goes back up again. Again, you're kind of, once you get, a week or two out, it really kind of gets a little cloudy, or not as helpful to speculate on that. Also, something to notice here is that look at all the selling we've had, all the sell delta here at this like 605 level. This is huge. So I think that's also kind of why you saw this rejection here, is that you've got this large volume shelf of all the selling. So I think that the big boys are taking profits, and I think it's important to know that, because SOX is really what's driving the Nasdaq and supporting the S&P. So if you do actually see some sort of dive, in SOX, that weighs heavily. All right, Nvidia. This one I think is just they needed something to move the entire market today, so they just plowed a bunch of money in a Nvidia and drove it. So by weighted market cap, it's pretty big. But one thing I would say here is that if you measure, this is probably a little ABC, and it did get a little bit higher, but you also kind of see that there's some selling after that. All right, so I would say possibly you might see something like this, a little bit higher, and then kind of bounce off this 50-day moving average, and maybe and that would be like a pretty complete, if you guys follow wave theory and stuff, that would be a pretty complete, it's called like a double zigzag. I won't go into that because again, I want you guys to stay awake, but it's possible that would be like a finishing move. So just again, be prepared for some sort of like dip in, small little dip in a rocket, and then potentially like a capitulation move down, because we haven't had that at all yet. We've just had distribution. We haven't had any real selling. It's just been this stair step down crap, which drives everybody nuts. But still, it tells you a lot. It tells you it's distribution and not like headline driven. All right, so last one, Tesla here. This guy, I think is I think you'll probably see some sort of little like reflexive bounce, maybe like that, hit the 50 and then head down. Again, like everything, all these charts look like stair steps. And I think everything is just kind of getting sold at the moment, but there's still a lot of buy delta around this level, and you could see something like you could see something sort of like a bull flag, like let's say gets a little bit lower yet. My trend lines are off here, but you could see some sort of bull flag like this. I actually think this is not that unreasonable. It's Tesla, right? Everything Elon Musk touches turns to gold. so I keep blowing the mic, but I mean it's possible. But for now, I think probably just there's no really like clear entry, either long or short. So maybe just give it a day or two to see what kind of happens here. This big sell was unprompted, and it was huge. So I'm glad I got out of the TSL trade with a bag of loot. So, all right, that concludes today's presentation. I guess again, I guess I could stop recording here, unless you guys have questions you think would be helpful for the group. Go ahead and shoot. All right, I'll stop recording then. We can continue this fascinating discussion. Fascinating lecture, really. It's just lecturing at this point. All right. Thank you guys for listening to everything. I try to give a comprehensive. Try to keep a comprehensive update for some of these other things, because a lot of these things are interrelated. And I hope you guys are able to trade the waves right and make some loot. All right. Thanks for watching.
Yeah, something